Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. All right, guys. Today is the day. This is a pretty big non-farms. I mean, it seems like it's since the pandemic that like every non-farms is a big non-farms. But this one is like a really big non-farms, okay? Because of the point that we are in the interest rate cycle and everything else, the treasury market in particular is going to be made or broken by this number. So, is the intro really loud? I'm sorry. I have to look at that. It's probably more that the intro was probably loud compared to me, huh? I should maybe like re-export it and with different normalization. All right. Anyways, let's get to the charts. There you can see, I haven't really moved a whole lot. There was some interesting behavior yesterday after we left, but yeah, this is not really doing too much. S&P 500, slightly higher overnight. Oil just took is on a pretty big 2-3 day tumble here, man. I really think that there's some things like the rumors that Biden's trying to make a deal with the Saudis and things like that. It sounds like that they're playing nice, or maybe the Saudis will turn things around. I think that's why they're moving this way, but I also don't think that this move down is like a disaster. We could still come back up to 90, like 100, maybe it's in the cards. I don't know. We'll just wait. I'm sure that if another opportunity to go long it presents itself, we'll see it. Okay, gold and silver still languishing after this huge rise in rates. And copper actually seeing a little bit of a bounce today. So copper separating itself from them. And then we've got the dollar below 106 right now. So a little bit lower. And Bitcoin seeing a little bit of a pump and dump yesterday. I don't know if I should call it a pump and dump, but a BART. A really quick BART over there. All right, so good morning, Damwon, Jiwi, Tariq, Dom, and Phoenix. So yeah, this is you're all here bright and early, right? This is going to be a massive number, right? Okay, so the numbers we was looking for. U.S. non-farm payrolls expectation 170, previous reading 187. And I don't have any, this time around, I don't have any kind of special edge here on this. I think that the numbers are probably going to come in fairly close to the expectation. Keep a close eye on that average earnings month over month. They're looking for a reading of spot 3 with a previous reading of spot 2. That one might come in below expectations at spot 2. So, and you know, there's lots of different data points that they're reacting to. So don't just do the you know, don't just do the knee-jerk reaction based on the headline number, right? It's going to be a very sophisticated trade here today, right? I don't know if I'm actually going to trade it. It's probably going to be pretty wild though. We've got what, 2 minutes? Make sure I got Twitter going on right here. Oh, and yeah, and then I guess we'll talk about it later, but I got the new chair today, or yesterday. I'm enjoying it so far. It's a really good chair if you want to like, if you like to rock in the chair or like, you know, lean back. It's a good chair for that. Oh, really? You just discovered what? Which video brought you to my channel? I put out a video on Monday that we were pretty hype about. I think you watched 5 already. Probably wasn't the new one then. It probably wasn't the one about smart money concepts. We were hoping that the smart money concepts video would kind of start a little bit of a fire, but it so far is tracking with the rest of them. Oh, proven, that's the best one, dude. That is the best video on my channel. Yeah, proven market behaviors. I know, right? It's the whole thing is a crock. I took so much joy in making that smart money concepts debunking video. Okay, it's time to focus in here. My stomach is giving me a little bit of issues here. I don't know what the deal is, but they are definitely pulling for this. You need to make more videos like that? Well, it'd be hard to make a video better than that one, I tell you what. But new research is coming out all the time, so maybe something really big will come out that we can get into. What? I am so done with this number. I am so effing done with this number. Expectation 170, actual 336. Average earnings did come in slightly below expectation, as I suggested, though, at spot 2. And what did the unemployment rate do? Unemployment rate went slightly up to 3.8 versus 3.7. Right, this is total joke. This is bad. This is very, very bad. Bidenomics is I don't want to be the conspiracy theorist. I'm anti-conspiracy theory, but like if Biden's Department of Labor was not trying to cook the numbers, what would be different? Explain to me what would be different. This is nuts. Dude, the treasuries got demolished. Their 30 basis points right there. That was 30. We were at 475. Sorry, not 30. 3. We were at 475 and now we're at 478. This is so bad. Okay, so I got to check myself here. Is this as bad for the economy as I think it is? Well, so it's not necessarily the end of the world. It's not like we crash here, but we are like well below. Wow. The S&P 500 has dropped 30 points already. Let's not say that this is like recession confirmed is on the way, but the market definitely does not like it, do they? They've revised every number down. They have. Totally. So there's no conspiracy. It's just, they're just, it's blatant and in the open and everybody knows about it. Is that what you mean? Dude, look at those flows now selling in the treasuries. Woo. Let's sell the low, shall we? Yeah. They're not done, dude. Like, this could be like 485. Oh, what? Okay, so oh no, I didn't get filled. Okay. So I saw a little opportunity to try and catch it as she goes, but I just saw something in the micros that makes me a little bit weary about trading it. Because there was a sweep that took out like 6 ticks. Yeah, I don't think I can put my live account at risk here. This is bonkers. Okay, so where's the Japanese yen at? That's one thing, is that, so remember, the Japanese have been saying we will target volatility and not specific levels. So people thought that it was 150. We're pretty far away from 150. But I think we've got to be careful about steep pullbacks still. Well, I don't see how you can have numbers like that and the Federal Reserve not be raising in November. Like I have just moved from, I don't think that they're going to raise interest rates again this year, to they probably need to raise interest rates in November and December. Now, I'm probably extreme. Let's see where the smart people with all the number crunching kind of stuff, you know, to see where we go. But the 336 is a pretty big deal. Well, it will be, yeah, so we should come back. Do we have any information about what the last month's numbers were revised to? Yeah, I'm trying to get the thing in here. Does the Forex Factory calendar show revisions? Wait, where does it show that? So you're saying pull it out and bring down like the chart or something? Oh, revision. What? Last month's was revised higher? I don't know. We're being told basically that the labor market is like way stronger than we thought it was. I don't know if this is like assures that the Federal Reserve continues on a hiking path that decimates the economy and causes a recession in 2024. I read a report yesterday, I think it was from a Bloomberg survey, that showed that 80% of CEOs expected a recession in 2024. Can you believe that? That's just like totally insane. And like, you know, let's just come over and try and game things out. So for the treasuries, I don't know. I think in the longer term, we probably are headed for 5%, but the question that matters right now is how far will it go today? You can already see this one, right? That is a steep pullback. Where was my original entry at? 16.5. Yeah, that is a steep pullback. I don't want to mess with that at the moment. Oh no, my volume profile's not pulling up. Ninja crashed, basically. Ninja crashed, basically. Which one is it? It's ZN that crashed, so I'm definitely going to restart Ninja Trader. I'm definitely going to restart it here. Is it going to make me kill it? I love Ninja Trader. I really do. It's in many respects my favorite platform, but not for the stability. Right? Not for the stability. Has it really been 5 million in 2.5 years? It could be. Something that I find really interesting about markets is their ability to meet supply in some respects. Like we always think of it as, sorry, I'm probably skipping frames here. We always think of it as, okay, supply, too much supply, prices go down, not enough supply, supplies go up, prices go up and all. But there's actually interplay between them. And that interplay between them, it really comes down to the supply side. And this is the thing that the supply side economists had right, showed that the politicians have ignored, essentially. And it's really interesting stuff. And it kind of suggests that supply, for one, supply has its own kind of stimulative effect, that if you support supply, that all of a sudden there's more people working, making more, and they go out and they spend more. So that in itself increases the aggregate demand in the economy. But there also seems to be this thing where when the supply is there, the market will kind of shift around to meet it. It does that in the treasury market, as we were talking about earlier in the week, where a lot of issuance is happening over in the 5-year. And so what's happening is demand is moving from the longer end of the curve over to the shorter end of the curve to meet, the Federal Reserve and the Treasury and whatever in the middle. And that's reducing demand over on the longer end of the curve and causing steepening. And so it could you see similar kinds of dynamics in the labor market? It is an interesting thing. It's an interesting theory. Of course, we have no proofs, and I don't know how you would prove that. It would be a really complicated thing to show. But are companies out there hiring more because there's this labor? Although I don't know if those, illegal workers would necessarily show up so much in non-farms, because most of those people aren't going to be paid through a payroll company. So, okay. Can I see things now? You gotta let me see my volume profile chart, my daily bars. Oh, they've definitely got to be working, but it's just I'm not sure that could explain the changes in the numbers that we've seen. Okay. So let's start here with ES. So we're definitely below yesterday's lows. We're not to the week lows. Ooh. So if I were to step in here and say this news would justify us going down to the weekly lows, which I believe it does. Quite frankly, I believe it does, because like when we got that report on Wednesday, that's when we hit the lows. When we got that report on Wednesday about the jobs opening, right? That was, maybe the economy is pretty hot. And then we kind of shifted around. Now with the non-farms, now we're really saying it's hot. Like I'm way, how hot is the labor market? I think it's hotter today than I thought it was on Wednesday. So from a fundamental perspective, that could be a great reason to justify going down to the weekly lows. But that seems so far. It's another 40 points. That would be such a massive move on the day. How far have we moved so far? So will it let me minimize this? I don't know why. For some reason, my volume profile chart is being slow. Okay, so the biggest loser today is UB, of course, with a -1.5. Where is NQ? NQ is not quite to -1%. It's -0.98 so far. If the migrants work, they will all receive the same social security number, nice cash fund for the government. Well, they, I don't know how this works. There's like ways for them to work without a social security number and still pay taxes, basically. There was a time when I knew this. So it's one of those things you looked up one day and then you forget about it. There's so many things to know, man. One of the things that's been on my mind and has kind of become the theme for the week is thinking about the number of things that we do where, like, the number of decisions that goes into it are just insane. Like, we always talk about making trading simple, and really you want to be in a position where when the thing happens, you know what to do. It can be a really complicated thing that you're doing, but you've created a system around that kind of simplifies it and allows you to do things really quickly. But when you think about our trading, there are a ton of different little things that factor into every trade. Or if you're managing a portfolio, and there's just so many things to know. You can't remember it all. That's why we need systems. This is because these things are too complicated that for you in this moment, in this time, to do all of it. So you kind of do it a little bit aggregately over time. And one of the things that I struggle with is you learn stuff, you incorporate things in, but then you forget about them. You just can't think about all of them all the time, even with all the systems and stuff that I build. As someone who runs a business that gets loads of illegal immigrants, that usually come with fake social security numbers. Well, that's true too, but actually, okay, so tell me this, because I was under the impression that, like, not all fake social security numbers are made equal. That most of them are like, they know the business isn't even going to run the number, and so it doesn't matter. It's just a number that is valid and that the system will take. Versus other ones are like stolen identities or dead people or things like that. Do you know more things, or did you forget more things? Well, everything that you know is buried in there somewhere. It's just you might not necessarily have access to it. You don't find out they're fake until tax time. I can run any illegal with a fake social security number for a year before it comes back from the government. But isn't there this whole thing so that illegal aliens can still pay taxes and get their tax return, like their like their rebate or whatever you want to call it? And I don't understand how they would do that without if the social security number was illegal. So I thought that there was, yeah, there you go. They can get EINs. That's what I'm talking about. Yes. That sounds familiar. EIN, yes. 30 years pushing lower. The micros look a little bit better. It's pretty volatile, so if I was really dead set on keeping my risk to 10 ticks, I don't think that now would be a good time to trade. I think some of my biggest losses have happened on non-farm days. So I'm gonna be... Oh, wow. Okay, so I don't know who it was, but a central bank speaker saying we're experiencing a soft landing right now. See, what I'm seeing right now is this is not a soft landing. This is a no landing, right? They hit the ground as independent contractors so they can work while they wait for whatever to happen. So, there was a video yesterday. If you guys don't watch Kurt's Gazette, it's like one of the biggest YouTube channels out there, and they only release one video a month, but they have like really, really sophisticated animations that they make for them, and they try and cover topics of scientific or socio-political significance. And so this month, they decided to tackle population decline. Now, they've tried a bunch of different thumbnails and video titles, so I don't know what the title will be now. The title it was when I was watching it is why Korea's population is collapsing or something like that. But basically, they covered the very controversial topic of population decline. And they did a very good job too, by the way. Like, they had really looked into the issue and they understood the importance of it. Because, you know, as I was talking about yesterday when we were talking about level 4 investing as a society, and we've put the majority of our level 4 investing attention on climate change. And I believe that the largest threat to civilization right now is population decline. If you're intentionally not having children because you think it's bad for the environment, you're making things worse because it takes people a long time to die. So, like, that's a solution that won't do anything for 60 years. And in the meantime, you know, if you believe in climate change, it's going to get worse. I'm agnostic about it, okay? But I know a lot of people don't. So, it's just going to get worse, and you won't have the people to be able to meet the challenges. So it never makes sense. It's never a good idea to not invest in the people. Okay. You've got to invest in the people, and to say, oh, well, we want to decline in population and things like this is a bad idea. And like, there's some really negative economic consequences and so forth. And so the way that Western nations have been dealing with it has been with immigration. And Uzi is pointing out something very, very important, which is that immigration does have an economic effect, and largely when it comes to GDP, it's a positive effect. It increases GDP. It's not as good for your wages. If you're a working class person, okay, you're not going to get paid as much because there's more labor. But, you know, it is a good thing for GDP. And yeah, socially, the impact is net negative. I would agree with that. But the people in charge, they don't care about that stuff. This latest drop is pretty wild. Like, do you see the number of huge icebergs along the way here and everything? And it just cut through them like butter. So are we going to get 3.9? Sorry, 4.9? I mean, that's the way they're headed. The German population is actually very low, and the only reason why the labor market is still kind of alive is because of the immigrant workers. That's true. Weiss always wanted to go to Europe. I had to tell her about how her odds of being... yeah. Because the larger problem is that these countries, at least with the way that things work right now, do need the immigration, but it's having a very negative cultural impact. And, you know, I would think that it maybe wouldn't be quite so bad, but when you add all of the other social problems from the internet and the generational problem all on top of that, is just too much. So over in Europe, things are flipping, is my understanding. My understanding is that the politicians are kind of having to back off from, you know, let's just invite as many migrants as we possibly can, because it's starting to turn out so badly for them politically. But it's the problem that I'm the most concerned about. So if my goal is to make society better for the people that come behind us, and that makes my primary responsibility is for my people, my family, right? So the goal is create generational wealth so that things will be easier for your kids, right? And one of the things that they found is that generational wealth rarely lasts more than 3 generations. So like the grandkids have a tendency to blow it, basically. And how do you avoid that? One of the things that I notice is that we get so busy that we don't imprint our values on our children when they're very, very young like we should. Because that's like, you know, when the kids are really young is usually when you're like working the hardest, you know? And well, what are those values that you've got to get into them that's going to give them the best chance of success of being able to continue things on, you know? And this applies to the nation as a whole too. That especially here in the United States, we're a nation that's based on a set of ideals, right? Nationalism in the United States is not the same as nationalism in Europe, because the United States is primarily an ideological nation. It's based on a constitution and the ideals in the constitution. Well, classical liberalism is what, you know, we'd call. So, you know, how do we teach and ensure that the next generations understand those values in a way that they can continue to be successful? And how do we do that for people that are coming in? Because I think that the sense among most people, you know, for me is like, you know, we do need immigration to a certain extent. Let's make sure that the amount that we are getting is still beneficial to the people that already live here. But then the other issue is that when we do get the people, we need to integrate them, because the concern is that they're not integrating. Probably not as big of a deal here in the United States as it is in Europe. You know, people from South America are very much, I think, believe in American ideals, and they're really more like working class conservative people. So I don't think that the way that one works out socially in the United States is going to be quite the same as what Democrats think it's going to be. But when you get into Europe, that's a real problem. And in Germany in particular, it's starting to become a real problem that the migrants do not seem to have the same ideals as what the country wants. And they're not integrating them very well. Is Utah getting busloads of I haven't heard anything about that. I mean, we get a lot of immigration in general, but not nearly as much as the... So I think in Utah, we get a lot more second generation. You know? Like when I lived in West Valley, because West Valley is where most of the South American population is at. But, you know, like where I lived, it was a fairly nice new apartment complex. And so you had kids that their parents brought them over. And then they're citizens and they've been through high school and are getting into tech or whatever, you know. Rich second generation immigrants. I don't think parents should let their kids know how much they have in the bank. I believe it causes kids losing motivation for success. Okay, so you have a good point, but I think that your solution causes a different set of problems. Because if you raise your kids to think that they're poor, and then they find out that they're actually not poor, that leads to a different set of problems. Yeah. So, I think that what you do instead is you tell the children how you're doing. You talk about the finances openly in front of them. And you push home the idea that, you know, if you're doing well, that's a responsibility. And that's the thing that I teach. And frankly, I teach my wife because, you know, my wife, she come from a rural area. So you know, they're not in on those kinds of cultural things. Whereas I did not come from a rich, like upper class family, but my dad was like first generation tech bro kind of thing, right? Like he was a sales guy. We did good. He did good. Okay. We were not poor. Okay. And, you know, that's the thing that I see is that money is a responsibility, or it should be viewed as a responsibility. So I think that the Jewish community does this very, very well, is they say, you know, if you do well, you have a responsibility to give your kids a living, to teach them how to do the thing. They don't have to do the thing that you do, but you're there to teach them that, and they will always have that to fall back on. And then the second thing is to give back to the community, that they want to do things like part of, I've never understood this, the whole bar mitzvah thing. It was like, what these bar mitzvahs are crazy. And it's like, who spends the most money on their bar mitzvah and stuff like that. But it is actually a very beneficial thing to the community. Of course, there's like good and bads to everything, but you know, regularly having those events and stuff, and it brings their community together, and it's bringing money into their community, and it makes them better. It, like, the success is a responsibility. If you have money, it's you have a responsibility to go and invest that money well, to continue growing the economy and creating opportunities for other people. It drives me absolutely nuts when I see all these people saying like, oh, it's immoral to be a billionaire because you could go and, you know, give it to the government. No, don't give it to the government. Go and make more jobs with it. You know? So that's my approach to it, is you let the kids know what's going on and you teach them the responsibilities involved with it. Because I think that the thing that you don't want to run into is the richer you get, the more lax you get about it. You know, you don't fully realize yourself because you're too comfortable, right? You need to develop an attitude that is going to push for excellence regardless of the circumstances. Okay, so that last move down, I was kind of sitting here like, maybe I should be participating in this because that now it's like really going. But like, look, they have completely ray traced this all the way back up to 16 half-agains. So you don't have to starve in the third world to understand what that. Oh, I'm not quite sure what we're arguing about here. How's Europe is going to overcome all the traditional Islamic culture that they're importing? You don't have. It's like saying you can't know that being poor sucks unless you've been poor. Now we know being poor sucks. It's, you know, like the thing that is so interesting about it, right? So I'm not. Do you guys see this Victoria Beckham thing yesterday? Oh my gosh. Like, I saw it on TikTok and then I started searching for it, and it was like all of the news stories that I was reading about it had only been posted like 30 minutes earlier. So it spread really, really fast. But basically, David Beckham, the famous football player, he married Posh Spice, essentially. Okay, right? She was Posh Spice, right? Am I getting that right? And they asked, okay, what was it that attracted you to him and everything? And she kind of tried to say, well, you know, like we were working class and everything, and we kind of had those shared things. And David pops in and he's like, don't lie. It's like, you were not working class. She's like, I'm not lying yet. No, what kind of car did your dad drive? Okay, he had a Rolls Royce in the 80s, and he gets her to admit it, and then he pops back out. So it was like, oh, Posh, you're gonna try and play this like you're just like the rest of us. You were not. If you have a Rolls Royce, I bet you that her dad must have owned a car dealership or something like that, right? It's kind of funny because the truly rich, they kind of think of you as working class, unless you're like a banker, a CEO, or, you know, super famous actor rich, right? And everything else is working class, and they don't understand the difference between the people that like literally have to dig ditches for a living and the people that spend all their day sitting in a computer chair like me, you know? And the thing is it changes you, you know, like working hard. Physical labor changes you, and it changes your outlook on life, and in many ways that I think are positive. I think that everybody needs a little bit of manual labor in their life, but on the split side, many working class people develop attitudes about money that also very much hold them back. They don't think about money as a vehicle for investment, and that we can put that money into a business, and that business will grow and make more opportunities for people, and that's better than giving people handouts. And that's why you get very many people on the you know, a lot of these kids that are going to school. They go to school, they got a lot of debt, and then they're not able to get a really good job. And that's always the attitude that they kind of take, because they don't understand the investment part of it, and they don't understand like the risk-taking part of it. Right? So both sides have deficiencies, essentially. This doctor friend pays all of his family members $5,000 per month, and he wonders why his kids aren't pursuing college, just gaming all day. Well, that's why I was saying that, like, it's like between the ages of like 5 to 12 or something, you have to instill excellence in them. Is I think the first part, to be honest with you. I totally know what you were talking about, but this is the older generation. The children get a European education, and there are also European values. Well, no, so the Islam thing, so on the topic that you guys are talking about, I mean, that's interesting too. Okay, because Uh, Islam is actually way more interesting than what we are typically told about in the West. Okay, because the view that we get in the West is basically like the hardliners. I mean, like Islam is a pretty conservative religion, right? Okay, but then you've got the Sunnis essentially that are like ultra crazy conservative, you know, like Afghanistan or Iran. The typical the more what I would say standard Islam, you know, like I guess parts of Saudi Arabia, for instance, is not. I would say it's not fundamentally incompatible with Western culture. Of course, there are ideas there still in the religion that like I vehemently disagree with. Okay, but like you can see it going on in Saudi Arabia. Like they're moving towards giving women more rights, like women can drive and things like that, right? There is a version of Islam, I think, that, you know, can be perfectly at home with the Constitution in the United States. Whether that's the one that wins and that's the majority of the people that's coming over, I don't know, but and you're right, you won't betray Islam for secular stuff. That's true. So there is a real danger in it, but that's kind of a more long-term concern. I think that the cultural problems that they're seeing in Europe right now is more than just Islam. In fact, Islam is maybe actually a small part of it. There's are really more cultural differences that I think that are aside of just Islam. That you're basically importing this underclass that just ends up being very resentful. And part of that has to do with how they're doing it, you know? See, like the problem that they're having in Europe is, I mean, it's not that the Islam thing isn't a thing over there, but I honestly, since the pandemic, I haven't been reading a whole lot about that. It used to be that every day on conservative media, there would be some story about how, you know, Sharia law was being imposed on people in Europe and stuff like that. Right? I haven't heard a whole lot about that in a long time for some reason. Okay. But that's not, is my understanding, that's not the problem that they're having over there. What's happening is they import all of these migrants, and they don't actually want these migrants to come over and have full lives. And this is the thing that bothers me so much about immigration in the United States, is these liberals will always say, like, well, you know, you're not going to do this job and you're not going to do this job. Okay, so you're basically admitting, when you say that sort of thing, you're basically admitting that you're importing slave labor. You don't want the immigrants to come over here and take your tech jobs. You want them to come over here and do hard labor and clean your house and mow your lawn. It's so messed up, man. It's so messed up. And it is a big problem, because if you bring a bunch of people over here and then you don't really let them be a full part of society, they're going to be resentful about it. And, you know, here in the United States, because it's illegal immigration and because the culture is a little bit different, it's not as big of a problem. But over there in Europe, you know, they import all of these immigrants and then they put them in a ghetto, like in France in particular. You know, you put them all in a ghetto and then they get pissed. And yeah, I'm going to be surprised that, you know, all of the riots and stuff that they saw over there in France. It is. Yeah, it's you know, the people, and that's the thing that drives me nuts. about the issue is you have these people that say, oh, we need to have the immigration, like this is the moral thing, and they all stand up there all high and mighty like they're better than everybody else because they want the immigration and whatnot. And what they're doing is not moral and good at all. And they don't have good intentions, because if they had good intentions, they would be trying to get those people over here and helping them find a place to be, you know, a part of the American dream. And they don't. They want slave labor. It's so messed up, man. You go into the United States and you go to the rich parts of town. Right next to the rich part of town, there's always a little gejito where all of their immigrant labor lives. It's so messed up. I don't know. When it comes to Christianity, like the reality is that the vast majority of the kids did not stick with their religion, right? At the end of the day, Christianity believes in the law of chastity, and that's not what most people want. Most people want to go and do it with everybody. And most kids, they want to go and have premarital sex. And so they left church. They left church. They left their cultural values, and they tried to replace it with narcissism, essentially. That's why they behave. You realize that's why they behave the way that they do, right? Because think about the progression. You're a kid, you don't want to go to church because you want to have premarital sex. So you leave church, you have premarital sex, your parents are super pissed about it, but you do it anyways. And then you think, well, I think it's okay, and I still think that I'm a good person, right? So now what happens? You have this narcissistic wound, essentially. So now you're spending the rest of your life trying to prove to your parents and everybody else that you actually are a moral and good person, even though, you know, you didn't believe in the law of chastity. And so you're trying to show it in other ways, like, oh, see, look, I'm a good person because I support immigration, for instance, because we typically can think of immigration as helping people less fortunate, right? But because they're doing it primarily for narcissistic reasons, they don't actually end up helping these people, and it just becomes a way to abuse. Islamic families have higher birth rates than Native Europeans by like 4 to 1. Do you know that conservatives have 50% more babies than liberals? Like if conservatives will have 200 like out of 100 people, they'll have 200 babies, and the liberals will have 150, because like half of them just don't have kids. That's gonna be weird. That's why it's so funny when you hear liberals talking about like, oh, you know, conservatives and white people are becoming a minority in the country. Well, yeah, the demographics are changing. It's not actually necessarily in your favor. You think that you've changed the demographics in your favor, but actually it's not, because you're not having kids, and because those people that you're bringing over are actually very conservative. There's a good chance that in the future there will be more culturally conservative on these things, not less. I don't know. I can only, you know, on some level, when you're talking about large groups of people, there's only so much you can do about it, you know? Like, how do you instill values on a group of people that are immigrating? You can't. Like they're going to have certain incentives and reasons why they're coming. And that's going to trump everything else. Yeah, no, Left, I think he's right. I mean, when you say that, it's like, oh, okay, so like in the United States, it'll be like 90%, you know, Latino Catholics. No, but they will be a large enough demographic that it will be dominant in the politics. Yes. It's already happening in it's already happened in Dallas, and pretty soon, like big cities like Chicago and New York, it will also be the case. Like, that's just straight up where the demographics are going. Now, at that time, how those people will actually vote, that's kind of an open question, right? We know that they do tend to be very working class, and they do tend to be very Catholic, for instance, for Latinos in the United States, okay? But then there's also their kids, and we're also talking mostly about their kids, you know, because their kids are going to be the ones that will be American citizens and will be able to vote. And how will they trade? How will they vote? Will they continue to vote liberal? Will they maintain their parents' conservative values or not? And liberals seem to think that current trends will continue and that they will all become liberals eventually, because that's what happened in California, right? That's the whole argument. Oh yeah, California. The demographics of California changed in a generation. It's nuts. It's absolutely nuts. Like, look, I can't. I don't want to say that like demographic change is always bad. Okay, like to some extent, it just is. Right. For us, I think that we kind of have to take the approach of it just is, because there's not a whole lot that we can do about it. But intentional demographic change is so wrong. So wrong. And I think that many people are engaging in trying to engineer demographic change to their political advantage. That's so awful. I think the U.S. imported Latino demographic will go liberal in the long run. I don't actually. Well, but I think that the term liberal and conservative is maybe not as useful here. I think that I do not think that the Latino demographic will ever go woke, is what I think. So, of course, a lot of things depend on like how this next election goes and how things go. But if you were going to follow current trends, then what you would be most likely to see is the Conservative Party continue to dwindle in popularity, and then see the Liberal Party split, and essentially see the Liberal Party split into the woke left and the traditional liberals, and the traditional liberals and the conservatives gang up together, and then are a more powerful voting bloc, and the woke eventually loses, because the woke has not been, you know, like Latinos hate the term Latinx, for instance, right? So the liberals are bringing them in there thinking, oh, these people will always vote Democrat, but they're not actually going to vote in these policies that the far left actually wants, like communism and stuff like that. Okay, F7. I think he's trying to troll us. It's kind of funny how we got pulled left field onto this talk about immigration. I'm not even sure what having a soul is worth these days. Most people sell theirs anyways. Okay, so we did come back here. The 5-year saw particularly strong pushback. What was the high yield? Did we get to 9? No, 888. Yeah, let's say 4880. That was the highest that traded. This recovery back has been pretty consistent range, so there must be some sort of a meta order going on here, but that might be profit taking is what that one might be. I think the USA has got the better immigrants. I mean, if the US has got the same illegal immigrants that Europe is getting, there would have been some type of, yeah. People would be very, very upset, yeah. Like straight up, Islamic culture is very triggering to a large portion of Americans. Very much is, yes. Trying to zero in my chair on the just the right amount of tension in the how you can lean back. I don't know. I'm trying to get back on track here. Like the original point that Uzi I think was making is that there has been enough illegal immigration during the Biden term that the demographics are permanently changed. He's absolutely right. The demographic future of the United States has been permanently altered. And is it affecting the jobs numbers? I don't know. I'm a little bit skeptical about that, to be honest. I think what you're seeing in the economy is actually a lot of rotation. Like big tech came in and laid off a lot of people, and then all of those people very quickly went and got jobs in other parts of the industry. Less prestigious jobs in smaller companies. I think that's a large portion of it. The music comes from Stream Beats by Harris Heller. Love the guy, love their Stream Beat stuff. You went 7 for 8 in this? That's pretty good. I don't know if I had been taking more trades if I would have done so well. So it always comes back to that, like, the way the way that the market reacts to non-farms payrolls can be really confusing sometimes. And that's why I'm a little bit weary about trading it these days. Right? Because on a day like today, oh yeah, absolutely, they're going to go down. They're going to sell all the things. But like, would you have anticipated this pullback or this recovery right here? You know, what's the right price to buy and sell at is a complicated thing. And the way that it shifts around and stuff can be confusing. Okay, so the S&P 500 got to 4250 and has recovered, but we haven't opened up yet. So let's see what the first 30 minutes of the market brings. NFL laughing all the way to the bank thanks to the Travis Kelce Taylor Swift relationship. So I saw this guy on TikTok making a prediction, and I think it's a good prediction. Like, if it actually plays out this way, it'll be pretty funny. Was that your winning trade noise? No. Anyways, so like Taylor Swift has been to the first two Chiefs games, and they're saying the next one against Denver, I think it is, they're gonna say she won't be there. And they'll lose. And then the next one after that is a home game and she'll be there. And then they'll say that Taylor Swift is a good luck charm. That's probably where this is going. He has a good theory. I don't know, you know, in the NBA, some of it is kind of manipulated. I was always a big Jazz basketball fan, and I look back at that and I'm like, no, they were never going to let us win. Like, the Jazz would have to be so good that no matter what they did, they would still win in order to win a championship. But when it come down to the wire like that, they would always judge against you because they didn't actually want Utah to win because it's a small market. No. Utah was supposed to be the bad guy. How much is the NFL like that? I don't know. But the Taylor Swift thing is definitely interesting. I don't like Taylor. Don't tell anyone. I don't want her team to like catch wind of this because it seems like she has a really good image management team and they'll come after me and cancel me. But I don't like Taylor Swift. Do I need to go further? Her music is basic. It's commercial garbage. And she's not actually that good of a person. She's actually quite narcissistic from what I can tell. She just has a really good image management team. I don't think about her at all, but everyone talks about her in some capacity. Well, because you realize that she's like single-handedly boosting the economy, apparently. You know what was so delicious to me the other day was there was a Reddit thread about how billionaires are immoral. And then somebody pointed out that Taylor Swift was about to become a billionaire. And trying to see people like try and fight against it and or justify it was just absolutely hilarious. They're like, well, yeah, but she treats her people nice. Well, yeah, but she's still taking value from them. She should be paying them even more if she's making that much. Because she can't do any of that without them. It's so funny. That says more about the economy than it does her. No, I really think that Taylor Swift has so like one of the things in the economy is if you can get something that everybody kind of likes, that's where you make the big money. That's why Budweiser beer was so bland, and why it was such a bad idea for them to take a hard stand on a cultural issue, right? Because the whole thing about it is bland. That's why it's the best-selling beer. This is bland. Nobody can complain against it. But if you get the widest swath of people, you make the most money. That's basically the way that it works. And Taylor Swift has zeroed in on that perfect subsection where most people kind of like her. I've always been like never understood why her music is so popular. It's like this is like really generic music and I don't like what she's singing about because she sounds kind of stupid to me. She sounds kind of foolish to me with her relationships. 100%. Will you ever attend a concert at the Sphere in Las Vegas? 100%. If one of my top EDM artists like Above and Beyond or Noisia or somebody like that was doing a show there, I'm 100% there. What do you know? What shows they have? Let's see here. Sphere. I saw the stuff from the YouTube thing. The YouTube show, the U2 show was crazy. The Sphere Experience. It looks like so they don't have any actual concerts planned on their website, but they have an experience that you can go and see. So, which starts today. Oh, it's the first one is today. First I know about Ferry Corsten. Listen, especially if it's trance, I can tell you everything. Right? I'm not just a like who's your favorite EDM artist. I'm like a who's your favorite EDM labels, right? And I'm definitely an Anjuna Beats guy. That's always been kind of my primary, which is funny because in the beginning I didn't like that stuff, but then Anjuna Beats kind of started to become the forward-thinking stuff in trance, and I was with them all the way. I haven't visited SoundCloud in a long time. I had a SoundCloud, but I kind of gave up on it. I don't really, I think a lot of it was that when I started trading, I stopped messing around with that. Like actually what happened was, in my first marriage, we went out and we did that stuff a lot. And then when I got divorced, I kind of was, I did some things during the recovery period, but ultimately I decided that was not what was going to get me to where I wanted to go at that time. So I started spending less time doing that. And then eventually, I got remarried and I started trading. And then it was like, I definitely don't, because the thing that sucked about doing all of that, well, I'm remarried now. It's been a long time. We've been remarried for like 6 years now, I think. But well, now that was like too big of an interrupt there. I forgot where I was going with that. Anyways, when I started trading, I like sleeping because the thing that sucked about dance music, I was a pretty good DJ. I had worked pretty hard. I had built a decent name for myself. I was certainly not like the top DJs in the city, so that like get booked every week, and it was like you have to go to all of these club nights and stuff and talk to people and get gigs and like constantly network. And I was doing that and just kind of did okay. And it was just kind of like, I burnt out on it, I think, essentially. And then it was like, no, I'd rather put all of my focus over here now. So now I mostly just listen, and I still have my Tractor Control S4. I switched. I used to have like a zone mixer and the turntables. I sold the mixer to buy this. I still have the turntables, but I have them set up. But you know, there was this one day I was sitting there and like all of my friends had done dabs before they got there, and I was like, this isn't fun for me anymore. I need to go do something else. And I made this shift. Still love those guys, but I just didn't want to sit around and talk to a bunch of high people, you know? It's kind of sad because the current sound was much more my thing. I liked to have something that had a lot of rumbly bass in it and was a little hard. And the techno that's been popular recently was very much in that vein. This is going all the way back to like 2015, right? How old am I? I forget. 38. I'm 38. I have to think about the year. That's old enough. In May. It's a May. Born in May. No, I've not seen Shields before. What the heck? What kind of question is that? Did I say I was 37? I was wrong because if it's 2023, I was born in 1985. So if it's 2023, then I'm 38, right? And in 2024, I will be 49, and then in 2025, I'll be 40. And then I can really start being called old man, right? Treasuries have kind of been slowly drifting back out. I don't know if they're going to turn into a hard down turn, though. It's still possible. S&P 500 is still just getting going, so. Hey, good morning, Walter. Anyways, when I DJ'd, I mostly did a trance, and I was more of a tech trance. I would go with the extremes. It'd either be like hard tech trance or really melodic, progressive stuff. And but more recently, I've been more into drum and bass, honestly. The stuff that Noisia does, even though they're not technically a group anymore, but they still have their podcast. I love their podcast. Everything that comes out on UKF, I listen to. Here, let me just find you. Well, let me find you the YouTube channel. What are you talking about? You were trans? No. I think that joke went over my head. You're making a joke, but I'm not. I don't think I'm getting it. Oops. Good thing that you weren't hearing that because I was blasting loud. Is Armin? You know what? I'm not a huge Armin fan. To be honest, listen, Armin, you seem like a great guy. You've done great things for the trans community. You need to accept that you're old now. You really do. It's just because the trance scene is like going nowhere lately. Like it's so bad that basically other genres come in and like steal your best stuff and then turn it into new genres, right? Because what's going on in like techno right now is basically trance music. It should be trance, especially when now they're doing fast techno. Okay, it's freaking trance. Everything about it is trance. And you're not doing anything with it. And why is that? Because Armin van Buuren is too old. He doesn't get it. And because he has cemented himself so much in the industry, like he can't do anything else. So I'm not a huge Armin van Buuren fan. Armin van Buuren is the Taylor Swift of trance music. That's how I feel about that. Because it seemed my approach is probably a little bit different from like most trance people, right? Because the thing that I like about electronic dance music is the dopamine part of it, right? Because when you're listening to music, what makes music so pleasurable to listen to is that you get both the serotonin and the dopamine, okay? Things that there's like a consistency to it and there's a familiarity to the style or whatever, but then, you know, there will be little subtle changes that, and you're like, oh, that's super clever. And then that gives you the dopamine, right? Well, EDM music leans more towards the dopamine. It's all about doing something new. Every year, there's a different trend. There's a different sound, style, or something that's like trending. And it's like the new thing. And DJs are all about trying to like find the next big thing and like ride that wave. And so I love that part of it. And the thing that I hate about trance music is that at any time that the trance music starts to do something innovative, there's all of these nincompoops, I don't know what you want to call them, but these people that think that the height of trance was, you know, 1999, and they just despise anything that's any different to it in any way whatsoever. So it's like, if it's not 138, it's not real trance. So I would never play 138, right? My approach was like, I want to be the bastard. I want to be the guy that, you know, everybody in trance is complaining about, you know? So if they're pushing 138, I'm not going to play 138. I might play 140. I'll play 135. Usually it was more around 128 during my time, but I'm not going to play 138 uplifting classic trance just because you guys think that that's what it is, right? I'm always going to go towards something that's got more edge and is unique and is doing something weird, you know? Which is why I think more recently I've gotten more into drum and bass, because over in drum and bass, they're all about let's do something weird, left field. They're all about that. I love it. How about the mouse? Oh, of course, Dead Mouse. I remember when so when I first got into EDM, Dead Mouse was one of the names that like I looked up a lot of stuff for, because, and the reason why was because he had presets in one of the synths for Fruity Loops, right? That's how I knew about him. And like the song I remember was Hi Friend, which most people probably don't remember, but that was before Ghosts and stuff, right? And then basically what happened was I connected with the local scene, and that's when Ghosts and stuff came out. And then it was like, it was all over from there. Ghosts and stuff in Faxing Berlin. On the trans side, you cannot understand how big of an influence faxing Berlin had. I've never tried any sort of illegal drug. I'm from Utah. We're Mormon. I've never illegal drugs, smoking, alcohol, marijuana, none of that ever. Never will. Even if like Jesus himself came down tomorrow and said, "Seth, you're no longer a Mormon," I wouldn't drink. Jim Rave electronic music will boost your testosterone by 20 times. So there's two songs that get me going. Okay, the first one is Warp 1.6 by the Bloody Beetroots and Steve Aoki. You heard that one? So I really like that classic Hoover Dominator sound. Oh, they do it so well in that song too. That is the best song with a Dominator in it, right? That one just makes me want to tear stuff apart. Oh, that song. Okay. And then the other one is Noisia's remix of Slap My Pitch Up. You know what I'm talking about? Oh my gosh. Like the original song is a pretty there's a lot of history behind that song, let's put it that way, right? But Noisia's remix of it is so nasty and aggressive. Oh my gosh. Yeah, Prodigy. Have you ever think bad perception about Jewish people's greed? I think that no. I don't know. To be honest with you, I don't understand where a lot of the stereotypes about Jewish people come from. I guess because I don't live around them. I don't know. Like my impression of Jewish people has been people that have a strong culture and are very good at passing it on to their children, and that their culture is very smart. Like it pushes them towards careers and success. And I don't think that it's about being greedy. It's just that they're smart. You know, they care about things that will lead them to success. Now you're starting to ask weird questions. Saw this thing about, so he's asking me about the Red Sea. I saw this thing where they're saying that like the Israelites probably didn't actually cross the Red Sea. Like it doesn't make sense. And then they found a different lake that was probably more likely where the Israelites crossed. And they also found that in that area that there are winds, and that there are times where the winds will come through enough to split that lake up. And that's probably where that story comes from. Judaism is about circumstance. Oh, get me started on that. That is one of those subjects that I think is so weird. Listen, I argue a lot on the internet. I don't do it nearly as much anymore. I guess I just like stopped caring about a lot of different things because I kind of started to realize that what we were doing was not working or helping anything. But I tell you what, whenever circumcision comes up on Reddit, those are some of the craziest threads. Oh my gosh. Because there are some people that are very vehemently against it. They think that it should be illegal, which, oh my gosh, if they made circumcision illegal, that would be trouble. Let me put it that way. Because that would be like considered an infringement on Jewish religious freedoms, is you know, because they believe in it very strongly, you know. I didn't with my kids. But anyways, and you know, there's some evidence that there are maybe some health benefits, but like it's kind of questionable research, you know, sources and things like that. But then there's this whole group of people on Reddit that are like, the sex I'm having isn't as good because I was circumcised, and they're like really bitter about it. So the arguments and stuff that you see around the issue on Reddit are like veer off into the completely irrational. Like people just start saying super crazy stuff. I don't get that at all. When I lived in New York, the nicest people were Jewish people. I think that a lot of the stereotypes and stuff just come from the Jewish community being so involved and entrenched in banking. And that these, you know, if it was that Mormons were, you know, decided that they were going to be, do finance, like all Mormons, the prophet came out and said, okay, we need to control the financial system. Not, well, you wouldn't say it like that, but I've received revelation that we should work towards getting careers in the financial industry more. Okay, then I think that you would see the same kinds of stereotypes. I don't think it has anything to do with them at all. It's class envy and bitterness about banking and loans and debt and stuff. I haven't heard any stereotypes about Korean. No, I have heard. I don't remember what they are, though. There's this one lady on TikTok that's so effing hilarious, and she always talks about the difference between Chinese, Japanese, and Korean. No, I don't see that. Yeah, I have it at 147.74. Am I wrong? Based on the JPY futures, the December contract, they're currently at 0.067,680, which 1 divided by that is 147.75. If I come over here, I'm gonna pull up the 6J. Oh, well, they did touch 150. I guess maybe it has something to do with the contract that I'm looking at. I've messed around with TT. I didn't like that it doesn't have as many features as Jigsaw. Nah, it must be that the Forex market is not pricing the same as the okay, let's see here. JPY Forex. Oh, whoops. We want USD JPY. There you go. All right, so on TradingView, they got 149.416. I thought, and are the currencies quarterly expirations? But it must be because of a spread between, you know, what is right now versus a future pricing out to December. That's kind of weird because in the past that's been like spot on for me. So I don't know what the deal is with that. I have to look into that more. Oh, I posted my link, right? Yeah. I never went and got the SoundCloud. I have a bunch of tracks that are like close to done that I need to just finish. Of course, I've heard of Axia Futures. Have you tried to enter a prop? No. Are you talking about funded trading firms? So there's all this funded trader stuff out there that they call them prop firms, and I don't really feel like that's correct. They're not really prop firms. That's not what I think of as a prop firm. We'll say. Well, we're back up to 16. Kind of seems like that there's a bit of a range here between 16 and 14 that you could maybe scalp, but it's very quickly starting to look like a okay, we made our move and we're people that made money are leaving for the weekend, you know? Nah. I worked for a bank and they had gotten rid of all of their prop decks. So the reality is that like prop firms don't really exist like they did. Jason Furman's tweeting, should have enjoyed the jobs numbers a little longer before refreshing. This one is looking at inflation protected treasury securities and they're going higher. You got a lot of insight. Well, thank you. Well, now is a good time. Actually, let's take a quick commercial break. We haven't done that today. And then let's try and read some of the economic analysis about this, yeah? All right. It's going higher again. What? Downsize Me. Bank of America reveals weight loss drug users could unleash a Payrolls spending spree. I'm down in on this because my wife was like, she has thyroid problems and she want to use one of those drugs. Because with thyroid, you get the insulin resistance. Okay, you guys should be back here. Let's read about, I don't know anything about it, to be honest with you. I haven't looked into the drugs very much. I know they're expensive. I know that. Okay. Here's Zero Hedge's story on the numbers that we got. The Biden administration has really outdone itself with everyone, even the most hardened bulls, expecting the September jobs report not to be not only the weakest of 2023, but to presage a big drop in futures payroll data. Moments ago, the BLS reported that in September, a month when countless companies shut down due to labor strikes, i.e. people not working, that the U.S. added a whopping 336K jobs, the highest monthly increase since January, and not only double the consensus estimate of 170K, but above the highest sell-side estimate of 250K. In fact, at 330K versus a medium forecast of 170K, today's print was the first Six Sigma beat of expectations in a long time. Furthermore, having become the butt of all data goal-seeking jokes in recent months after revising every single month in 2023 lower, the BLS decided to show people who is boss and revise not only August but also July higher. The change in total non-farms payroll for July was revised up by 79,000 from 157 to 236, and the change for August was revised up by 40,000 from 187 to 227. With these revisions, employment in July and August combined is 119,000 higher than previously recorded. Looking at the unemployment rate, things here were not quite so good, with the rate unchanged at 3.8 from last month and above expectations of a modest drop to 3.7 as Black unemployment increased while Hispanic unemployment dropped. Employment rates were as follows: adult men, adult women, going all that. But perhaps the most remarkable divergence in the report is that with headline payrolls surging 336K, household survey indicated that the pain continues as the number of people employed not only rose by less than 100K, but it was all part-time workers, which increased by 151K. Full-time workers, ? Why they dropped by 22K, and the lowest since February. I won't go down into all of their other stuff. While we publish a longer reaction about this piece shortly, the knee-jerk response stood out from Peter Teixeira of Academy Securities. For many, the markets questioned the veracity of this report, and for the early losses in bonds and stocks to be dramatically reduced, if not finish the day and the week in the green. The bottom line seems to be that virtually nobody believes the goal-seek propaganda spewed by the Biden administration anymore. Well, I don't know about that, but I'm sure I'm like just totally finished with this number. Like I don't even want to hear the number anymore. We heard the number, I'm like, this is crazy, and then we decided to spend the rest of the day talking about something else because I don't even want to think about it. It just doesn't, like, what is going on there? Okay, let's read their thing from Peter Teixeira. A Six Sigma beat of expectations in non-farms payrolls has sparked chaos across asset classes this morning as Academy Securities Peter Teixeira, I don't know how you say that. What a weird report. The headline number is shockingly good, 336 100K jobs created plus 119 of upward revisions. But things get a little weird from here. Average hourly earnings stayed at 0.2%, and even the annual level came in lower than expectations at 4.2%. Given the strength of the job market and the barrage of strike headlines, that seems somewhat surprising. Average hour worked remained unchanged at a moderate 34.4. We would have expected to have been stronger in the last month and this month, given the alleged jobs that were created in the establishment survey. The unemployment rate stayed at 3.8, as the household survey showed a decline in full-time jobs for the third month in a row. Total jobs were positive for the household survey, but driven by an increase in part-time jobs, which doesn't seem overly consistent with a blowout jobs report. Survey response rate seems to continue to decline. According to the BLS, for the June surveys, only 41.7% of potential respondents responded on the current employment statistics survey, which is way better than the 31.9% jobs response rate for JOLTS. When less than 50% of the ticket holders show up for an event, how good is the event? Or in this case, the data. Maybe the hiring is that good, but it didn't show up in ADP, which I suspect increasingly ADP has better data than the BLS, as it is more dependent on actual ADP data rather than a mediocre response rates to surveys. The instant reaction was hawkish, and the rate change expectations have shifted notably higher, and treasury yields are surging around 10 to 15 basis points across the entire curve. The 2-year bounced off close to 5%. Yeah, let's see, where is that? Yeah, they're a little bit above it, actually. Equity futures immediately puked lower, led by the NASDAQ. And the dollar is spiking, and gold is dumping again. Yeah, gold got destroyed, man. Where's gold at? 1824 was the low. Will all this knee-jerk action hold? Academy Securities' Peter Tchir is doubtful. Difficult to fight the algos, which are going to drive yields higher based on the headline number, but expect, as the days go on, for many in the markets to question the veracity of this report, and for the early losses in bonds and stocks to be dramatically reduced, if not finish the day and the week in the green. Nothing would surprise us less. Yeah. I don't think that the bonds are gonna end the day in the green, but equities have a way of digging themselves out of it, don't they? Okay, another story for us to read. Fund flows and bond yields, two different stories. While bond yields have risen sharply, flow funds into bonds tell two very different stories. We have previously written much on the recent rise in bond yields related to economic growth, event risks, and recessions, to wit, since rates and expectations must adjust for the potential future impact on the current value of invested capital. Equity investors expect that as economic growth and inflationary pressures increase, the value of invested capital will increase to compensate for higher costs. Bond investors have a fixed rate of return. Therefore, the fixed return rate is tied to forward expectations. Otherwise, capital is damaged due to inflation and lost opportunity costs. Therefore, the long-term correlation between rates, inflation, and economic growth is unsurprising. Of course, that analysis contradicts the view of Ray Dalio, Bill Ackman, Bill Gross, and others who currently expect rates to go higher. The disconnect comes down to time frames. More importantly, investors must understand the difference between short-term market-driven narratives and the long-term economic dynamics that drive interest rates, such as the basis for our discussion in this blog. Traders are heavily short bonds. Over the last 2 years, interest rates on Treasury bonds have risen in response to two primary factors. On the short end of the Treasury curve, the 1 month to 2 year bonds are heavily influenced by the Federal Reserve's monetary policy changes. As shown, there is an exceedingly high correlation between the federal funds rate and the 2-year Treasury. However, the long end of the curve, the 10-year bonds or longer, are driven almost entirely by expectations for economic growth, inflation, and wages, as shown above. Notably, the correlation is very high. Of course, there are periods where interest rates can and do diverge from underlying economic fundamentals. We are experiencing one of those periods, driving the view that, quote, rates must go higher. As we have discussed, the Commitment of Traders report gives us some insights into what major fund managers, hedge funds, and commodity traders are doing, given that yields on bonds are solely a function of changes in price relative to its coupon. Differences in yield can be influenced by market-driven actions in the short term. The most recent COT report shows a record number of short positions against Treasury bonds. That selling pressure has pushed prices lower and yields higher, as shown below. We saw a similar episode during the taper tantrum in 2018, yes. Notably, when something breaks, those heavily short Treasury bond traders will be forced to cover those speculative positions. They're not speculative positions. It's a basis trade, you idiot. I shouldn't call him an idiot, but that just him saying that alone is like, I don't know if I trust this guy, because surely he should know. In 2018, the reversal of those speculative short positions on bonds was caused to cover as the Federal Reserve stepped in with a massive reverse repo program to bail out hedge funds. It is clear that interest rates are driving the ship, but that ship could be on the cusp of taking a major turn. Maybe this time is different, but we doubt it. The odds favor an eventual unwind of the overly bearish 10-year note trade. The massive amount of short covering could easily push yields back into the 2% handle. Of course, while rates and speculative traders short bonds, you might think no one is buying bonds. However, you would be wrong. Follow the money. While speculators potentially drive higher yields in the short term, pay attention to flow funds. Two pieces of evidence suggest that rising yields aren't a function of lack of buyers. The first is the dollar index. Last year, there was a significant concern about a collapse in the US dollar, as de-dollarization would cause the loss of a reserve currency status. As both Michael Leblowitz and I discussed at the time, such would not be the case. Foreign nations accumulate and spend dollars through trade. They keep extra dollars to manage their economies and limit financial shocks. These dollars, known as excess reserves, are invested primarily in U.S.-denominated investments, ranging from bank deposits to U.S. Treasury securities and a wide range of other financial securities. As the global economy expanded and more trade occurred, additional dollars were required. As a result, foreign dollar reserves grew and were lent back to the U.S. economy. This backdrop for the dollar is not changing anytime soon. According to the IMF, the dollar makes up almost 60% of global foreign exchange reserves. While the percentage has declined by about 10% over the last decade, it is still 3 times the next leading reserve. I feel like my chair is a little bit too high. I'm going to bring it down here. Not surprisingly, as the U.S. economy is more robust than its counterparts and the yield on the 10-year Treasury bond is substantially higher, foreign excess reserves are now flowing into the U.S. dollar. When reserves flow into the U.S. dollar, these dollars are converted into U.S. Treasury bonds, such is why inflows into Treasuries continue to grow, despite traders' record short position in Treasury bonds. Now, this guy just doesn't understand the basis trade. Okay, whatever. Although I would maybe give you a reason to put the basis trade on, right? While interest rates have stayed elevated, investors have turned to longer-term funds, as noted by Morningstar. Long government funds were the most popular taxable bond category last year, during which time they hauled in $46.4 billion. Isn't that a small amount? For investors, the current rise in yields has undoubtedly been concerning. That rise, coinciding with much spin media about the death of the dollar and debts and deficits, certainly fueled the fears of spiraling interest rates. However, when we follow the money, I disagree with this guy's analysis. He brings some interesting information to the table, but I disagree with his analysis. I think that there's definitely are a lot of excess reserves being held by countries out there that's being invested back in the United States, and that they put it into bonds, but then they go short the Treasury futures to hedge it, and there's like this massive basis trade going on, and so the short position is because of the basis trade. They carry. That was just another article on Zero Hedge that I was reading. Okay. So our basic the gist of what we all just read though is basically everybody is just as shocked and appalled by the jobs numbers as I am. Doubt. Shall we go to Reddit? Let's see what Reddit's saying. That's always interesting to see. Reddit.com. Are alfalfa crops detriment? Yes. Get rid of them. Okay. r/economics. Jobs report stunner. I'm going to put press X to doubt. Okay. The best news about today's jobs report was the labor force participation rate. December of 2019, the labor force participation rate was 63.3. As of today, it's 62.8. We're literally closing in on pre-pandemic labor force numbers. Add to that, oil prices are starting to ease down due to demand decreasing, and the next CPI numbers are starting to look more promising. When we had a little slip there in the E-mini, causing the sound. I'm not stunned that much. Labor shortage continues. Boomers continue to retire. 3.8% unemployment levels. Of course, it varies wildly by industry and the job, trade, profession you are in. I don't know, man. The indexes decide to take another rung lower. It could be ugly, so... I feel like I'm on an autistic screeching econ doomer today. I don't understand how that number can be real. I don't think it's a good thing, though. Largest increases were in leisure and hospitality. Jobs added are mostly low-skilled jobs that don't pay well. I wonder if we have to rethink unemployment. It's mostly low-skilled labor. I'm unsure if the metric is as valuable as it once was. Could it be the case that, I mean, if it's leisure and hospitality, like let's not beat around the bush. It's mostly women, right? Hold on. Well, the only thing I see in the report is adult women unemployment 3.1%. But it does kind of seem to me like that a lot of women stopped working during the pandemic and now they're being forced to go back to work, you know? Large. Okay, this is weird. So things, they kind of got pushed out here at 20 and then a big bid showed up. So we got something going on here. It's a little curious. I'm gonna move this back over here. Yeah, here we go. Here's the comment that I was looking for. I'm surprised anyone looks at these reports anymore. Of the last 24 jobs reports, the 23 were revised downwards a month later. In more than half the revisions, the new number ended up below the predictions instead of above. In one case, it went from beating expectations to actually a job loss. The initial report is essentially just made up. Although they did revise the last 2 months upwards. That's true. Yeah, when he said of the last 24 job reports, 23 were revised downwards a month later, I don't think is correct. Maybe he's talking about like the first revision is down, but after the second revision, that's not accurate. It's only been like 6 of 7 or something like that. I guess we're in 10, so this year it's been like 9 or 8 or 9 of 10. It looks to me like dollar is recovering. So the treasuries aren't recovering all the way, but dollar is shifted. Well, let's see here. We can zoom out on the dollar, right? The dollar is looking to retrace. I don't know, guys. Peter Tchir might be right. Like if even the treasuries completely retrace. Kind of funny to see that huge bid come up there and the treasury's just being sitting here doing nothing. I kind of suspect that somebody maybe is buying the dip now, though. I mean, how much long is this? Well, it's almost 25,000K long since the lows, but that was after like a 40,000K sell. So we're still kind of in the, what would we call it? The retracement profit taking kind of area. They're super. Yeah, I don't think I'm gonna trade this. I just don't feel comfortable with it. I don't feel my tops either. So I didn't really get good night's rest. The babies wanted to go to sleep later than they should normally. And I also got a new chair, and I'm constantly thinking about my chair. Which data provider would you recommend for NinjaTrader? So if you're new and you're getting into NinjaTrader, then basically you're going to go to NinjaTrader brokerage and use CQG Continuum. I don't think it's the best data. What I do is Rhythmic, but I have a weird setup that, you know, like I can't use you might not be able to use a full version of NinjaTrader with the setup that I use. essentially. Because they're really trying to lock you into using their brokerage. Which kind of sucks, but makes business sense. How else you differentiate yourself, right? I'm thinking about my chair and thinking maybe I need to move it back a little bit, the seat. I'm gonna try it. I think that's good. I actually think that's maybe better than what I had. It does, the seat does kind of tilt a little bit back, so you kind of sit down and it's making my butt feel awfully flat. Sure is comfortable though. Like the way it cradles you and everything. It's very comfortable. DTN IQ, yeah. IQ feed has better quality data, but it is very expensive. IQ feed and trading technologies. America's anti-obesity craze. So we never read this one. Let's read this one. Courtesy of GLP-1 based weight loss drugs such as Wegovy and Moranjaro, produced by Novo Nordisk and Eli Lilly, is in the early innings of unleashing a food revolution that could spark devastating consequences for the junk food industrial complex as their obese customers eat less Big Macs and carby candy bars. To highlight the potential impact of the growing use of GLP-1 drugs, we linked a Morgan Stanley presentation on Thursday that shows a likely 1.7% reduction in calories consumed. In base case, we forecast a 1.3% reduction in U.S. calorie consumption by 2023. We assume 7% of the U.S. population, or 24 million people, will use AOM by 2035. Not surprisingly, Morgan Stanley found a more pronounced impact on certain food categories among those on the weight loss drugs. Net more or less. So they're eating more fruits and vegetables, more weight loss management foods and poultry and fish, and less everything else, especially confections, carbonated sugary drinks, cookies, alcohol, salty snacks, prefers. Yep. Okay. Expanding on Morgan Stanley's report is a Bank of America analysis. Geoff Meacham, available to ProSubs, who reveals the downstream effects of the obesity drug will impact the apparel industry as eventual weight loss in the broader population could spur a wardrobe replacement cycle. Wow. What? I have to talk to my wife about this a little bit deeper because she's gotten on a new doctor for her thyroid. So he put her on a different thyroid medication. She thought, oh, it's not even going to be close to enough, right? But she's actually been acting pretty good lately. I can tell, and like I can very easily tell the difference in her behavior because when she's like not when her thyroid is low, she's just like no personality at all. But then when she went back, he said, oh, you have iron deficiency. So I don't know if she's gotten the iron supplement yet, but that could be part of her problem. So we might be able to get her healthy again. But she's also like, she wants to take these drugs. So I'm kind of wondering, do we even need that now if these other things maybe will fix it? And then tell her about how the news is how some people are saying to invest. I mean, the play here is buy Lululemon, right? The average U.S. swimwear size is 16 to 18, according to the U.S. Department of Health and Human Services, which is up from a size 14 a decade earlier. Weight loss could aid demand for the offerings from traditional retailers and less demand for plus-size retailers like Torrid. Torrid is a stock? Really? Okay. Adding athletic brands like Lululemon and Deckers to benefit given the healthier lifestyles shown to be supported by the GLP-1 drug. How is it that the GLP-1 drug supports a healthier lifestyle? Is because I don't know. That's kind of weird. Maybe it's that you have people that they wanted to eat healthy and they were trying to eat healthy and it wasn't really working for them and they gave up. But now that they have the drug, then they eat healthy and they lose it. And because they lose it, they get the reinforcement to keep eating well. In a separate report, John Furner, the chief executive officer of Walmart's sprawling U.S. operations, said they've been comparing shoppers who pick up appetite-suppressing medications at its pharmacies to shoppers who are otherwise similar but aren't filling those subscriptions at Walmart, and noticed those using anti-fat drugs are spending less on food. We still expect food consumables and health and wellness, primarily due to the popularity of some GLP-1 drugs, to grow as a percent of total in the back half. Bank of America analysis adds the impact of these downstream effects is much less clear to the market, but could change consumer behavior over the longer term, with some industries benefiting while others having higher risk. To this end, we've evaluated the impact that broad adoption of GLP-1 drugs could have on consumer-focused sectors, including snacks and beverages, restaurants, tobacco, gaming, apparel, and food retail. Yeah, that's very interesting. Because basically what I'm starting to hear is we've defeated obesity and it's a pill. Like, okay. I probably need to lose 10 pounds. For Seth, I'm a little fat right now. I'm a little fat for Seth right now. 10 pounds. I'm like 78 kilos and I want to be like 73. Well, treasuries still seem to be kind of pushing higher, actually. So, you know, we should clear all this stuff above us. That's just noise. Wells Fargo, another rate hike before the end of the year is a possibility, says Wells Fargo. I think that if next month's non-farms is anything remotely close to this month's, they're going to have to increase both in November and December. And what's this? Only a spike in oil prices could wake up the long end from its torpor. Investors should keep duration short and accumulate cheap energy positions to hedge against the risk of a second inflationary shock that steepens the curve. This guy says, let them eat bonds, setting up the stage for a real recession. Oh, they were wrong, essentially. Well, yes, because the whole thing has been, we should see a slowdown. I mean, they still are predicting a slowdown in Q4, aren't they? But it's not. You're not seeing it in unemployment at all. So this idea that this is when we slip into a recession sort of a thing, probably not happening, right? probably not happening. And yes, there was a lot of people very, very much invested in this idea that are just dead wrong. But this, I think, just puts the inflationary spiral scenario back on the table, doesn't it? Yeah. Bloomberg tweets, bond traders unleash fury after jobs data testing boundaries of stability. They're right. You know, it didn't quite get there today, but we're above 4.8. It's another 5 basis points. Like, they are to a point, and if this keeps going, they are to a point where it's going to start breaking things. Absolutely. But let's see how much they retrace it, you know. What's Jason Furman saying? I'm in a contrarian state of mind today. I think the jobs market is not as strong as the headline's payroll number suggests. I agree. Let's read what Greg says here. Here's why. First, household employment was only up 86,000 and adjusted to payroll concept was actually down 7,000. This is why unemployment stayed at a recent high of 3.8%. It was not because of labor force, which grew a trend like 90,000. Participation was flat. Wages grew only 0.25% month over month, pulling the year-over-year rate down. This does not take away from payroll strength, but it does suggest more slack in the labor force than payroll growth implies, and 3 months annualization at 3.4% is consistent with 2% inflation. What about revisions? Haven't looked carefully, but BLS's seasonal adjustment algorithm sometimes feeds strength back to normal month. To prior months in an effort to smooth the trend. In reality, a month-over-month change could just be super choppy. And I think that's his whole thing. And Jason Furman says, not sure it's just today, good points here, but I still place vastly more weight on payroll than the household, so not worried about the adjusted household decline, but this is a coherent alternative narrative with even more dovish implications than my read. Here's another one by Steph Pomboy. I don't know who she is. The picture beneath the surface suggests this morning's employment report isn't nearly as strong as it appears at first blush. Divergence between the household survey and payroll survey expanded and new tends to lead households HH. The household survey tends to lead at turning points. Full-time employment is down a stunning 692K over the last 3 months. The last 3 times this happened, 2001, 2008 COVID recession. I really am not sure what to think. I don't know what to think, guys. So I'm noticing this chair is giving me a tendency to curl my shoulders over. I should just sit like this. Bring the microphone in here. How you like that ES action? Oh, they're recovering it. Well, I was kind of saying that, like, if the treasuries retraced it all the way, that would be pretty wild. But the ES does this sort of stuff all the time, so it wouldn't surprise me in the least bit. The deltas were buying that tip. Yeah, you know, if we come back over here to ES, you know, through most of the open, it was, let me make this one big. Through most of the open, it was selling. but it was not nearly as dramatic as you would expect it to be. So then they turn around and they buy the dip, yeah. And you're probably getting a squeeze now at this point. One of those candles was 200 points? Really? Well, is NQ positive now? Yeah, 0.08. But do you see, like, so if we look at our market analyzer, I won't pull it over here for you, but it's starting to get a little wild. Okay, silver, well, the biggest winner is natural gas, but natural gas is super volatile, so let's just ignore that one, okay? Biggest winner behind that, silver at 1.87%. So silver is higher today, and gold is a little bit higher today too. So gold and silver completely retrace it. Treasuries have not, okay? The biggest loser is still UB. So what actually was the result of all of this in the treasuries, at least, or like what was the play? It was a steepener. Take the steepener. It was where the money was, or just go short the 30, right? Which kind of suggests to me that, remember when we were talking earlier, the short bonds tend to react more to what they think the Federal Reserve is going to do, and the long bonds tend to react more to the economic conditions. So the long bonds said, well, these are strong economic conditions, that's bad for us. But the short bonds said, oh, we don't think this is going to change the Federal Reserve that much. Or this, you know, they weren't thinking about the Fed as much. Because the Fed side of the curve retraced more. And you get the steepening. And I mean the whole steepening curve thing that's just been going on anyways. Nassim Taleb is retweeting starting strength today. That's funny. So does that mean Taleb picked up an exercise regimen recently? So the 10-year is, I would put it in the same category as the 30. 30, 20, and 10 kind of behave one way, and the 5 is kind of a lost child, and then the 2 years and the bills are another way. The 5-year is kind of the transition point. Now, I should note that I think that that once again the dollar is being very dominant, and the dollar has almost finished retracing its thing, so we could still see some interesting stuff. Okay, Carl Quintilla retweeting or quoting Goldman, the goal continued rebalancing of the labor market despite is consistent with our view that the July hike in the Fed funds rate was the last of the cycle. We continue to expect unchanged policy at the November and December meetings. What? Continued rebalancing of the labor? I don't understand that at all. Okay. So let me get this straight. We just had a non-farms payroll that was double the expectation and well above any of the estimates, a complete shocker of a strong jobs market. And you think that that is consistent with your view that the Fed won't do anything and that this is the last hike of the cycle. I do not get how they they get that one, but okay. Wait, what's the picture here? What does the picture say? That's really weird. What's more weird than the report itself is how some of the analysts are reacting to it. Because I'm kind of still in the view of like, well, does this number actually mean anything anymore? Because I'm kind of starting to question it, right? But now I'm seeing some people saying that like, see, this just proves us that we're right, that we're towards the end of the cycle. What? Yep. What's this? Investing route won't end Fed balance sheet cuts, but endgame bubbling into view. The bond market tumult that has sent real-world borrowing costs surging is unlikely to deter the Federal Reserve from pressing onward with shedding nearly $100 billion of bonds each month from its $8 trillion balance sheet, analysts say. That's because even as yields have surged and sparked new fears over a potential recession, the move has been relatively orderly, even if it's been outsized. This is true. I have not actually seen straight up chaos over here in the bond market like I remember seeing, say, during the trade war or during COVID, or like I will never forget the volatility bloodbath. That was the craziest thing I've ever seen. It was the February of 2018 when we had the volatility spike where like just all of the algorithms just puked all at once. That first week especially was just unreal crazy volatility in the treasuries. It was like you see the way that it trades immediately after the non-farms payroll. It was basically, it moved like that for a whole week. And there was never more than like a few hundred contracts on the bid and offer. It was nuts. This move has been relatively orderly. Okay. Key measures of bond market volatility and liquidity are not flashing the warning signs they did this past spring when Silicon Valley Bank failed and forced the Fed to launch a new emergency bank lending facility. What's more, pricier credit is in line with central bank officials' desire to have interest rates at levels restrictive enough to slow growth and lower inflation back to their 2% target. I do not think the Fed would stop QT unless there is a structural liquidity issue in the treasury market. Chief economist with insurance firm Nationwide, Katie Bosjaknesik. Anyways, since June 2022, the Fed has followed more than $1 trillion of bonds to mature from its portfolio, including roughly $840 billion of treasuries alongside the 5.25 percentage points of Fed interest rate hikes delivered since March of 2022. Quantitative tightening is meant to withdraw stimulus from the economy, although officials stress that rates are their primary tool. The QT process is just playing a minor role in the rise in market rates, Astana has said. What was her first name? Kathy. Kathy says, and those gains are really due to the markets embracing the Fed's higher for longer guidance on rates. The stopping QT soon argument rests on the view that bond yields have gone up too much and liquidity is too poor, so ending portfolio runoff could relieve upward pressure on rates. And the market pressure is real. In the 2 weeks since the Fed's last meeting, the 10-year note shot up more than 50 basis points, nearly 4.9%, including a 15 basis point leg higher on Friday after the non-farms payroll for September came in close to double what was expected. A closely watched index from Goldman Sachs showed U.S. financial conditions near their tightest for the year on Wednesday. So far, federal officials themselves are unperturbed. Cleveland Fed President Loretta Mester said on Tuesday, over the next year, those tighter or higher rates will have an impact on the economy, and we just have to take that into account when we're setting monetary policy. Meanwhile, in a Bloomberg podcast out Thursday, Chicago Fed President Austan Goolsbee said the market move is not a puzzle. It's clear that the long rates coming up is what you'd expect. To another, it may dent the case for more rate hikes. San Francisco Fed President Mary Daly on Thursday said, with the rise in market rates, The need for us to take further action is diminished because financial markets are already moving in that direction and they've done the work. While not seeing current events bringing an end to QT, some analysts see a growing case for it wrapping up next year. QT drains liquidity from the banking system, reducing bank reserves parked at the Fed and cash stashed in its reverse repo facility. The Fed wants reserves sufficient to allow firm control over its benchmark federal funds rate, but no more, and finding that sweet spot is hard. Michael Barr, the Fed's top bank overseer, said on Monday the Fed is attentive to the reserves issue and noted that is something we're going to feel our way towards. We are not anywhere close to it now today. How much longer? The Fed's first stab at QT ended abruptly in September 2019 when it went too far and lost control of the target rate. Some worry that could happen again. We didn't get a lot of warning last time, UBS strategy Michael Loherty said Thursday at an event held at Bank Policy Institute. This is a long article, but I'm liking it. The Washington lobbying group, when reserve scarcity hits this time, I think we're just going to slam into it with little warning. When reserve scarcity hits this time, I think we're just going to slam into it with little warning. Others believe money market rates will start to move up in ways suggesting the system is short of cash. A canary in the coal mine might be the Fed's standing repo facility, a largely untested safety valve for market stress that could see a sudden surge in demand. There's no firm sense of a timeline on when QT might finish. A new New York Fed report in April projected an end to QT around the middle of 2025. A survey of major banks by the New York Fed released in August eyed an end to QT in mid-2024. Mark Cabana, rate strategist with Bank of America, said quantitative tightening likely has around a year to go, and that reserves are already more scarce than many recognize because banks are already hoarding cash. We would argue that banks are already liquidity scarce, and if that's right, then how long can quantitative tightening really last? It can only really last until the overnight repo facility is substantially depleted. Daily overnight reverse repo balances have tumbled by more than $1 trillion since early April to just over $1.6 trillion as of Wednesday. Fed data shows at the current rate, Kamana said that endpoint is likely in about 13 months. Pretty solid article there from investing.com. And with that, we have retraced a lot of movement, but that was like from 489 back to 48, and we were at 475, so it's still a 5 basis point hike or rise today. Seth, do you know what refresh rate on the bid ask is best and why? Perhaps what Peter Davies shared. Well, so all that tells you is how many milliseconds between each update. So there's a couple of different ways that you can approach this. One way is to put it at 100. So you get 100 or 200. That's 5 to 10 updates per second. And that is sufficient for most people's use cases. Once you start putting it higher than that, you're going to be using more system resources. Okay, so I believe mine up here is on the default. Let's see here. Update interval 100. Okay. So I do it 10 times a second. Okay. Higher than that, you can use more system resources. Maybe when I update my computer, I'll turn it up. So then the other way you might want to take it is you might want to say, well, I want it to match up with my monitor refresh rate. So let's say that you have a standard 60 hertz monitor, right? Then you would want to say 1,000 divided by 60 equals 16. So if you do 16, that would get you in like standard monitor refresh rate. And then if you want to get into like the high refresh rates, like the 144 hertz ones, then you're talking about 7, right? So going below 7 is probably pointless. So that kind of gives you the range of what the differences are. I personally, especially if you're trading the treasuries, I don't think that having a ton of updates really matters. So well, it's time for me to get going, but I think that my read from what we've seen today is that the number was higher than expected. The market threw a huge fit, and then everybody started to doubt the number. I felt like that we've kind of been at a like turning point on this in a while. Like, how can people believe these numbers? Like, people are going to start saying something. Now it's we're already past that bend. People are just outright trading against what the non-farm numbers are saying now. So what that means for us in the near future, who knows? But I kind of suspect that higher interest rates are in our future. Like I said, today could like completely change the narrative, make or break things. If this number had been weak, then we could be saying, it's working. We are kind of going into that slowness that we expected. But instead we get this. We get this and no landing. No landing, and that's bad for interest rates. Interest rates are going to get a lot higher. Wouldn't you think no update is better like a delta? No, well, no, you can't do no update. So you have to have like a cycle to say like, okay, here's all of these different threads that need to update. How often do I need to make sure that I go through them, right? And one way that you can do it is you can just say when they want to, okay, which would actually kind of end up just creating a big logjam. So instead what you do is you give them a time amount. So you say, I'm only going to update it every 100 milliseconds. And then I'm going to process all of the messages that I have up until that point. And that is what will give you like smoother, everything updates correctly sort of behavior. Now 100 milliseconds is kind of like this industry standard minimum. Like when we were doing risk control systems, we had to do it 10 times a second. So when you go under, just realize when you go under 100, you're basically doing a better standard than like what a lot of banks do their risk controls with. So does it really benefit you or not? Who can say? Who can say? I think that it does look nicer when you have the update level set really, really low. You used 1 millisecond. Yeah, I think 1 millisecond would be too low. I would not set it lower than 7. I mean, if you have a 240 hertz monitor, then maybe you could go to 4. But 1 millisecond makes no sense. Like, that's not even enough time for it to, processor to do all of the processing. Right? You get it too low and you get into the point where it's just always running. You could have problems with it for sure. But the reason I do what I do is for exactly what, is I had a problem once and I said, I'm just going to play it the safest that I can. I'm just going to put it to 100 milliseconds, which is, I wouldn't go higher than 100. Unless it's like an instrument that you don't really care about and aren't trading. But for the instrument that you're actively trading, I wouldn't set it higher than 100. Right? So I put it to 100, and that gives me the best chance of, not having a problem. And honestly, if I reduced it from there, I don't think I would notice. I really don't. But try putting it to 100 and just seeing if it bothers you or not. If you can really tell. All right, yep. I should get going. I will see you guys next week. I'm sure that next week will be just as... Do we get the inflation data next week, or do we have to wait for the week after that? Let's just check real quick here. It's always good to, at the end of the week, to look at... Okay, so we do have CPI and PPI next week, so I will see you guys then. In the meantime, stay excellent, team.